Which FANG stocks are driving the market lower? Why will the stock market keep crashing lower? Which stocks am I trading, and what is my strategy before the coming great stock market collapse? The kangaroos keep coming to this market, so let's jump into it. This is not financial nor professional advice. This video is for entertainment only. Hey everyone. Google reported poor earnings and poor revenue. This is especially concerning because they lost money mainly because of YouTube advertising. Advertising is not bringing in near the revenue that it used to. YouTube is an important marker. It's much like Snapchat. These companies rely on having a lot of advertising income in many ways. And so if they're doing poorly, anything that relies on advertising on the internet is going to do poorly also. This bodes very poorly for Meta, another gigantic FANG stock. These companies, Google, Amazon, Microsoft, Apple, and Amazon, they account for 25% of the net market capitalization of the S&P 500. That's how big of a deal it is when something like Google misses on both revenue and earnings. It's very negative and it has implications for so many other stocks. Microsoft beat on both earnings and revenue, but they had the slowest growth in 5 years. So that's not very encouraging. The strong dollar interferes with the revenue of a lot of these companies. Like Apple, they get significant income from foreign countries. And so when you have a strong dollar, people in foreign countries have more difficulty buying the internet products. And so this has implications for something like Apple, because Microsoft is similar to Apple. It's different in many ways, but it's similar to it in some ways. So the currency problems is again one of these things. Microsoft can be taken as an example of a computer giant having difficulty, and Apple's a computer giant, and by implication, they're probably going to have at least some difficulty or more difficulty than they've had in the past. They also pointed to there's probably weakening demand. Okay, that is the real nightmare, and that's probably going to only get worse as the recession deepens, and we're going to find out on the 27th, Thursday, whether this is going to affect the whole market deeply. I suspect it's going to. I suspect we got several punches coming our way that we have to defend ourselves against. Microsoft also mentioned energy cost. Okay, if Microsoft has energy cost problems, what kind of problem is Amazon going to have? Because they rely so much on deliveries of goods. They have Microsoft and Apple are more internet based. Their product is in the cloud. Amazon has to actually deliver physical products, and you would think their energy costs would be very high. Texas Instruments, whose symbol is TXN, they missed on both revenue and earnings, and they blamed it all on China lockdowns. Their revenue projections were reduced by about 10% for the future. They are the largest maker of analog and embedded chips, and they have thousands of products and thousands of customers, of course. And so they make a pretty good barometer of the economy. They blamed it all on China. With the concerns that are being laid out by Google and Microsoft, do we really believe it's all due to China? To which I can only say, yeah, sure. Texas Instruments chips are used in a variety of products, everything from appliances to military hardware to spacecraft. So it's a wide range of products, a wide range of customers. It's an omen of things to come. Even companies that reported good earnings, you have to take it with a grain of salt in the current environment. Visa reported good earnings and they beat on revenue also. So that's a good thing, right? Okay. The reason that they're doing well is because interest rates have increased. Guess what's happening to the interest rates on your credit card? Okay. And then they don't make a physical product. It's all digital, so they're less affected by cost. And people are also using their credit cards more as they're running out of money, or maybe they've lost their job, and that's going to be an increasing phenomena until we have people out of jobs and going bankrupt. It's not a rosy scenario, and Visa and financial services, they tend to do good with higher interest rates, especially early on, before the recession fully hits. But you got to wonder if it's going to continue after a recession hits and demand slows and people start spending way less. Tesla is going to cut prices on its cars sold in China by anywhere from 5 to 9%. China is just a rolling disaster. My triple leverage inverse fund on Chinese stocks that are sold on the American exchanges went up 30% in one day. Okay. And it went up 30%. That's Yang, Y-A-N-G, went up 30% because Xi, whose name is spelled X-I, was reelected president for a third term, which it seems like he's becoming a near dictator, if not an actual dictator. I think Xi and China are trying to figure out how they can allow billionaires while also advocating for the common good. Well, you can do both. In the United States, we allow a free economy. We let the bulls run, and that's what you have to do. And you will have a small percentage of people that will create most of the wealth. It's a general rule that the top 20% create 80% of the wealth. And that's a rule in many things. The top 20% pay 80% of the taxes. It works like that. And Jordan Peterson talks about this quite a bit. And it's always a struggle. How do you keep that going without it becoming so terribly split where you have the super rich and the poor? You want to bring both a little bit closer together, which is always a challenge. And I think China is especially caught in that position. Xi is trying to be sort of like Mao in many ways, who was a full-on communist, but he's got this capitalism, and I think you have to let it run freer than China is comfortable doing. They're comfortable as long as they can keep limits on it. But the thing is, capitalism does better when it has regulation to prevent corruption and so forth. But you don't want to limit the upside. It's a saying in the stock market that you let your winners run, and that is always the challenge. I think the triple leveraged inverse fund on the real estate index will continue to do good. I day trade all these triple leverage funds, inverse funds that I'm talking about. I day trade them simply because this is a bear market, which tends to be very unstable and very changeable anyway. And then you add that triple leverage, man, you can get your face ripped off in a rally, but on the downside, it's just gravy. And Tuesday was a gravy day. Monday, you got out of it. You were going to get your face ripped off. But Tuesday, SQQQ, the triple leverage inverse fund and the 100 largest companies on the NASDAQ, did very well. And I anticipate that Meta reports earnings after hours on Wednesday, and I'm going to keep it on and keep trading SQQQ, day trading it before Meta reports, which I think maybe I should leave it on, but I'm so hesitant to leave these on overnight because they are so volatile, and I'm making good money day trading them, and this is the environment we're in. The market wants to go bullish, but the inflation isn't allowing it, and the interest rate increases in the Federal Reserve won't allow a rally for right now. Mortgage rates are going up to like 7.3 or 7.4%. Wow, what a change, huh? Wasn't it like 3 or 4% not very long ago? And renter demand for housing is starting to decrease. House prices have decreased a negative 0.7% month on month. So we have this the houses are going down, renter demand is going down, mortgages keep increasing. It doesn't look good for real estate right now. Oil seems to be stabilized at about $85, and all the energy companies seem to be doing well, all the oil companies, and it's possible that they are doing well now, but you wonder how well they're going to keep doing when demand falls off and people stop driving so much. I think oil is going to go down. And it's surprising that Europe has most of their energy needs being met. And they're having liquefied natural gas being shipped in from the United States and other places around the world. And also Norway has taken over as the major supplier of oil to Europe. So things are looking brighter. We're at the very start, and it's probably too soon to tell in many ways, but it looks like we're going to have a decent winter and maybe a warmer than average winter, which will be a blessing. So the major stock I'm trading is SQQQ, the triple leverage inverse stock on the 100 largest companies on the NASDAQ. You have to decide for yourself whether you're into this. It is sort of a day trading jamboree right now. And I think I'm sort of forced into this. I like to be more long term, but this market is just so unstable. I also think of doing more Yang and more DRV trading, but I take those again on a day-by-day basis because when the QQQs go up or down, they tend to follow. So I'll be trading them if it looks like the QQQ is going to go down, which will make SQQQ go up, and DVR and Yang usually move with them in sympathy. This is a crazy roller coaster kangaroo market, and it takes a lot of patience and also some impulsivity to day trade on it. But I'm getting used to it, and it's taken some time to get used to it, but I'm going to keep doing it because it's been so profitable for me. Be sure to like and subscribe and hit the notification bell if you want to be notified of future videos. Good luck in your trading. Thank you.